Let's bring in Michael Morris from Guggenheim. He's the entertainment media analyst. Michael, what is your take here? Was it the metrics from the quarter that are pressuring the stock, or was it the specifics of what was said by the CFO during the call that we just shared?
I absolutely believe it was what the CFO said during the call. His comments that were really forward-looking about the company's pace of reducing financial leverage at the business. That reduction of leverage is really critical to the way investors think about the equity value here. It's kind of viewed as, I don't want to call it bulletproof per se, but a real reason to be involved in the stock, even though we know that there are secular challenges. So when we hear that those secular pressures are weighing even more heavily on that pace of delevering, that creates concern in the marketplace.
And so what is your reaction to it? There are those who say, well, we never really believed their targets at the end of 24 were realistic, and so we had that built in. Meanwhile, the stock is down 15%. So I'm just curious, as somebody who's been relatively positive on the name as well, what's your take here?
Sure. Well, historically, we've had concerns about the ecosystem in this company as well. And we did move to buy last year, really looking at a couple of critical components. One, we do think they have a great collection of assets between Warner Brothers, HBO, CNN, and now moving more aggressively into their digital strategy. So we feel good about this core set of assets. However, the pressures in the broader marketplace are very heavy, and we're seeing it across the board in this linear ecosystem, even as some of our digital players are starting to see some reacceleration in the back half of the year. So we published a note on it, even following what we heard from the company today, expressing some of this incremental concern that we have toward the future of the business.
Yeah, you point out the strike, you think the street basically understands, but it's the advertising commentary that took some by surprise.
Yeah, absolutely. I mean, if you think about it, everybody understands that the strike is a challenge for the business. There are some uncertainties around, one, the timing of the strike being resolved, and two, what the outcome of these strikes will mean for future expenses, levels of content spending, et cetera. And that's pretty consistent across all the companies. So we're not making decisions on one stock versus another, given that they're all going to tackle that narrative. I think that's digested. But when we're talking about starting to lap already challenging advertising environment and seeing equivalent declines going forward. In addition, we didn't mention this before in this conversation, but the company did talk about leaning into some incremental investment going forward. And that's fine. Long-term investors like investing on the back of strong IP, but that was really a surprise given that we still don't seem to be past the synergy and cost-cutting part of the story yet to be talking about incremental investments.
The networks business seems to be a real concern. I mean, you pointed out, but perhaps even declining more quickly than even those who are pessimistic might have expected. Not sure what that means for Paramount or even for my parent company, Comcast, as well.
Yeah, well, I mean, it matters a lot, and we're looking for data points. And I guess I'd say a couple things. Number one, there is a handoff from linear businesses to digital businesses. This is another topic that I would describe as completely understood by investors. However, the pace of the declines in the lower multiple traditional business and the rate of growth in the new business, the streaming business, those are uncertainties. And when we look on a consolidated basis, which is what we advise investors to do, what we're seeing is that even though you're seeing big percentage growth numbers in digital, the dollars are still relatively small compared to the compression. And until we start to see kind of what I would consider either a stability in the linear declines or a sort of supercharging in that digital rate, which is a competitive environment, we continue to kind of incrementally take our numbers down, and that's an issue.